Now, the favorite dinner time discussion in Mumbai today is whether it's a good time to buy property or should one continue to wait. For quite some time, there have been conflicting reports of things looking up, while some are predicting more pain to come. The latest perspective comes from Knight Frank India, whose chairman and managing director Shishir Baijal joins us to explain the findings of his latest study. Shishir, thank you so much for joining us. Shishir, according to your report, the MMR residential market seems to have been hit badly yet again. Your data shows that first half of this year was the worst period in this post-global financial era, financial crisis era. Where has the MMR market gone wrong?
I think there are no two ways about it that this has been a tough period for the MMR residential market. In terms of launches, we are down close to 47%. Over the same period last year, 30% over the same period last year, 47% over the preceding quarter. In terms of absorption too, it's close to 9% below last year. In terms of prices, also it has been fairly muted. The prices have remained stagnant over the previous half year, and I think we just had approximately an 8% increase over the same period last year. What's also worrying is that the quarters to sell of the unsold inventory has increased to 3 years. That's close to 12 quarters. So overall, it's been a fairly poor performance in the residential market. The reasons could be many. And if you look at it on both cases, if we break it into two, into launches and into the sales. The launches have been low fundamentally for two reasons. One, that the unsold inventory itself has been so high, and there's no sense further building up on in terms of the inventory. So a little bit of a cautious approach in terms of launches by developers have also reduced the number of launches. The second, of course, was the new development plan, the draft development plan, which came in last year and had a fair amount of objections to it, and which is now been sent for redrafting. Perhaps by end of this year, we should get the new draft out. That itself led to a fair amount of confusion in the market in terms of plans getting sanctioned, etc. And so therefore, which also delayed a number of new launches.
Your data is also saying that absorption seems to be hit badly, some 22% decline since second half of 2014. Now, this is in spite of the fact that developers have been offering generous incentives and discounts to buyers. But why are buyers not biting?
I think in terms of the level of confidence has come down. There are two reasons. One, of course, the fact that, as I said, the level of confidence is down. The fact that people today are reluctant to buy property on plan. They want to see the permissions through. They want to see development happening. They want to see the track record of the developers having in terms of credibility of delivering on time. And at this point of time, with the interest rates as high it is, and the price points perhaps being a little higher than what they think they should be, the affordability level itself is a bit low.
Shishir, what's your outlook on the price appreciation in the MMR market? Is this region still a worthwhile bet for investors, or should they hold back?
MMR was the second largest market for investors, second to the NCR market. But the investors are now a little more cautious in their investments for two reasons. First, I think in terms of the unsold inventory that's ballooning at this point of time, and resales not happening. And second, there are far more alternate financial investment opportunities available to them other than property, which is perhaps making property not as viable option today. In terms of pricing, the market has been, price rise has been muted over the last couple of years, and I think we've seen perhaps in this half year H1, just a marginal 2.5% increase, and we don't expect too much of an increase to happen in the next 6 months too. So I think price increase will remain muted for some time.
So are there any bright spots at all across MMR? Your report mentioned that the peripheral areas seem to be doing well.
I think that's a very good question, and I must say that while the overall market went down by 9% over the same period last year, there are a number of markets which did well. Markets of central Mumbai, central suburbs as well as western suburbs showed an increase over last year. And you can see, and it's not very difficult to see why. I think in terms of where the infrastructure came in, where the road connectivity is improved, where developments were of a high quality, offering a better lifestyle, developers were credible in terms of their schedule of development. You've seen buyers going to those developments and buying. And so, in fact, we've seen increases in some of the areas in which I mentioned of close to 35% over last year, despite the rest of the market taking a downward trend.
Shishir, my final question to you. What's your outlook for MMR's residential market for the rest of the year?
The second half of this year is extremely crucial. The second half of the year generally being the festive season is where we generally see a substantial increase in the demand for residential housing. And I think this is at that stage that if the second half of the year doesn't really pick up substantially, then I would say that this time next year, the market could be in some serious trouble.
Shishir, thank you so much for sharing the findings of your report. That was Shishir Baijal of Knight Frank India with his outlook on the real estate market of MMR.